Solution Talk. Africa means business, enabling investments through the G20 Compact with Africa. Please welcome your host from African Center for Economic Transformation, Mavis Owusu-Gyamfi.
Good morning, everyone. Thank you so much for joining us this morning on our discussion with the Compact with Africa. Now, the African Center for Economic Transformation, commonly referred to as ACET, are a key partner with the Compact with Africa on the continent. Most of our work is to support Compact with African countries with policy research, with advice, and to facilitate peer-to-peer learning. We believe fundamentally that all the solutions to African problems are actually on the continent. And a lot of countries have found solutions. So through peer-to-peer learning, others can replicate those solutions and take them to scale. So thank you so much once again for joining us. Today, I'd like to start by inviting Andries Oosthuizen, Minister of Plenipotentiary of the South African Embassy in Berlin, to officially welcome us and give us an overview of South Africa's G20 presidency and tell us a bit about the Compact with Africa. Over to you, Minister.
Good morning. My apologies for my back, but my wife normally says that's the best side. So, Madam Moderator, distinguished panelists, ladies and gentlemen, allow me to thank the organizers for inviting me to reflect on South Africa's G20 priorities and visit deliverables in contribution to the theme under discussion. It is my view that South Africa's G20 theme of solidarity, equality, sustainability not only resonates deeply with the Compact with Africa's objectives, but it also aligns strongly to the original mandate of promoting strong, sustainable, balanced and inclusive growth of the G20. We strongly believe that economic transformation must be inclusive, environmentally responsible, and anchored in strong partnerships between African nations, the G20, and the global private sector. There can be no doubt about Africa's prominence in the world today. Africa's economic outlook is largely positive, with projections showing the continent as the second fastest growing region globally. Growth is expected to be around 4.3% in 2025, driven by recovering key economies and the African Continental Free Trade Area initiatives, amongst other factors. As the current G20 presidency holder, South Africa finds it uniquely positioned to champion the Compact with Africa as a transformative platform for unlocking private investment, accelerating structural reforms, and fostering inclusive growth across the continent. In line with this, and among other key initiatives, South Africa is building on the German G20 Presidency Compact with Africa deliverable. And as a country, we are committed to work with all G20 members to pursue a G20 broadened and effective compact with Africa, the so-called CWA. It may be worth noting that South Africa will also be hosting a high-level meeting at the African Union later this year to mobilize support for this initiative together with Germany. Some of the strategies and possible areas for the CWA 2.0 for South Africa include supporting local businesses, particularly SMEs, as job creators. The CWA 2.0, the Compact with Africa 2.0, emphasizes strengthening local businesses, particularly small and medium-sized enterprises, as vital engines of job creation. Unlocking potential in emerging sectors offering significant opportunities for economic growth, job creating, including critical minerals, renewable energy, high-value tourism, digital services, creative industries, agribusiness, and manufacturing. The African Continental Free Trade Area projected to increase Africa's income by 500 billion by 2035, which provides a platform for greater cross-border trade investments, thus job creation. Scale up support for private and financial inflows to Africa. Lasting success depends on stronger G20 involvement. Significant impact requires deepening technical assistance, further improving in-country partner coordination, and enhancing support to entrepreneurship and local economic development. Before concluding, let me briefly highlight that South Africa is deeply concerned about high capital costs and debt servicing, particularly for African countries. Therefore, and under South Africa's leadership, it raised the theme of impediments to growth in the finance tracks, which inter alia addresses the following: low investment to GDP ratios, a target of 25% for sustainable growth, debt overhangs that limit fiscal space for development, regulatory and institutional weaknesses that deter private investment, limited access to affordable financing, especially for infrastructure and SMEs. Through this focus, South Africa hopes to contribute to the following: enhanced coordination among G20 members, international financial institutions, and African governments; to mobilize private sector investment through improved risk-sharing mechanism and investment promotion; promote tailored reform for Compact with Africa countries, focusing on country-specific barriers to investment; and to advance technical assistance and capacity-building efforts to support reform implementation. In conclusion, South Africa sees the Compact with Africa as not merely a policy initiative, but as a partnership for prosperity. Let us seize this moment to deepen collaboration, unlock capital, and build resilient, inclusive, and sustainable future for Africa and all of us. Thank you.
Thank you very much, Mr. Oosthuizen. Can we give him another round of applause? He's talking about building prosperity in Africa. So just to give you a little bit of background on the Compact with Africa, for those of you who don't know the program, it was a G20 initiative launched under Germany's G20 in 2017. And the objective is to bring together African nations and investors in G20 countries. It aims to work with African countries to support macro and microeconomic reforms, with the objective that as those reforms are implemented, it will attract investments from G20 countries. Currently, it is one of the few initiatives under the G20 that continues to thrive. And we know there's been a few initiatives under the G20. And there are 14 African countries that are part of that G20. Benin, Burkina Faso, Côte d'Ivoire, Democratic Republic of Congo, Egypt, Ethiopia, Ghana, Guinea, Morocco, Rwanda, Senegal, Togo, Tunisia, and earlier this year, guess which country? Zambia. So Zambia joined the CWA earlier this year. Now, it has led to countries implementing over 100 business reforms that improve the investment climate. And we've also seen investments from a number of G20 countries, especially Germany, as a result of these investments. But the question is, how do we take the CWA to the next level? And Mr. Oosthuizen talked about CWA 2.0, and that's the next iteration of the G20. So to help us leverage these reforms and really move it forward, I'm very, very pleased to say we have a discussion with a very esteemed panel today, starting with Honorable Situmbeko Musokotwane, Minister of Finance and National Planning for the Republic of Zambia, the newest member to join the Compact with Africa. We have joining us Siby Diabira, Head of Western Europe for the International Finance Corporation, who is also a co-partner, and Mr. Peter Ellersiek, Director, Impact Investments for Allianz Global Investors. Now, the CWA has African countries, but it also works with the IFIs, IFC, African Development Bank, World Bank, and IMF as part of the reform agenda, and ASSET supports this on the continent through learning and policy support. So, Mr. Oosthuizen, I'm going to have to unseat you. My sincerest apologies.
No problem.
So we're going to start this conversation with our very esteemed panelists. So, Minister, if I may begin with you. Can you tell us what was Zambia's motivation for joining the compact? And especially at this stage, with everything that's happening in the world, and what do you think, or what do you hope Zambia will get out of its membership of the compact with Africa?
Thank you. Zambia was very delighted to be a member of this compact group because, as you have said, the current mood in the world is that the development cooperation paradigm has shifted from begging to giving to one based on trade and investment. Zambia fully embraces this change because, in a sense, the old paradigm was about governments speaking to each other, government in the giver country talking to government in the recipient country. And in that model, a very important aspect or participant was left out. The aspect of the private sector was in the margin of that framework. And yet we know from global experience that what brings about economic growth, what creates jobs, what generates tax revenues is the private sector. So therefore, this new model based on including the private sector, we embrace that with total, we embrace that totally, and we are pushing very hard to make sure that, in our case, it does not remain on the lips and talking, but that we do tangible things to make sure that it works. If you give me opportunities now or later, I'll be able to give examples of what is being done in practical terms to make it work.
So, Minister, I will give that opportunity now, but I want to add another question to it. Have you had a chance to talk to your other peers who have been with the Compact with Africa longer? And if you have, what is the thing that you are going to do differently to ensure that you benefit more from the program than they have?
Quite seriously, we have not talked much.
Okay.
But that doesn't matter because we know what we want.
Okay.
And we are going to get it.
Good.
Yeah.
So could you maybe share with us some of the examples that you've put in place?
Yes. I think the issue now is we are all agreed that what fights poverty is economic growth sustained over a long period of time. The debate of that is over since the collapse of the Soviet Union, and also given the experience that we've seen coming out of East Asia, Indonesia, Malaysia, Thailand, all of them, who embraced private sector flows earlier on. They are way ahead of us. So what we are doing now in Zambia is to attract investment. For us, the base of that, some of you who may have been in the discussion yesterday, is the fact that the world is looking to decarbonize the earth. And to decarbonize the earth, you need critical minerals. We have the critical minerals, so therefore the solution is very simple. Can we draw in an economic ecosystem that will take advantage of these critical minerals, A, to produce more of them, just like what we've seen in Chile, Australia, Canada. B, do some value addition. Yesterday, I gave the example of the German car industry in South Africa. It would be such a nice thing to have the car batteries, the motors, and so forth, which utilize a lot of copper, which is abundant in Zambia. So mine more copper in Zambia, some of it export, some of it make motors, shift those motors to the German auto industry in South Africa, and then we export. So it becomes an ecosystem that is self-sufficient. So investment into the critical minerals. But also the critical minerals require transportation. So right now, I think part of the things that we are working under the Compact for Africa is how to have that Lobito railway line, which connects Central Africa with a port in Angola, so that the market to the Western Hemisphere can be serviced by that. This railway line in the past will be moving from capital to capital, begging for money. This time we've said, no, we'll move from place to place, looking for private sector money to be the core lead, and that is happening. Of course.
Minister.
Yeah.
Sorry, can we stop and give Minister a round of applause? We're not begging for money. We are getting private sector money to do this. Thank you, Minister. Please continue.
Yes. So, but of course, there's also the risking part of this as a support. And I'm happy to say that the European Union are working with us on that. The US government is working with us on that. But ultimately, we are looking for the private sector money. Along this railway line from Congo, DRC, Zambia, the land is being planned so that additional economic activities can be promoted, so that it's not just a railway line for copper and minerals, it is a railway line also for agriculture, a railway line for value addition, a railway line for all sorts of economic activities. So these are the opportunities that we are presenting to the partners in the Compact to say, here are the opportunities for making money.
Yes.
If you come here and invest, you go to your banks in Berlin, in London, in Paris, you go to the bank smiling because you've made money along this corridor. In the process, of course, jobs are created. Helping Europe also, this is good for Europe because when jobs are locally generated, the push for illegal immigrants is going to go down. So this is then the energy sector. You need energy to do the investment into mining and all these things. And by the way, the inflows into mining is just phenomenal. In the last maybe 5 years, we have something like $6 billion moving in to do mining. So you need energy. And energy, again, in the past, will go around begging for money, do the power stations. Not anymore. We go to the private sector. We have had to do strong reforms to make the energy sector to be able to attract private money. And that is happening, both in terms of generation and also in terms of, so generation, maybe hydro. We're also doing a bit of coal. We don't pollute as much as here, but just a bit. We're also doing a lot of solar energies. This year alone, I think we'll add an additional 1,000 megawatts in solar. So all this is coming out of the reform that is taking place to make it more attractive for private sector money to come in and do the investment. So these are some of the examples of how the Compact with Africa has been taken to the practical level.
Thank you, Minister. I feel as if you've summarized ASET's ambition for the continent with those examples that you've given. So the ambition around transforming our economies. We can export some raw materials, but we can add value to others. We should trade and work amongst ourselves, add value. And I think my favorite part was when you ended up in South Africa for the assembly of cars. Now, German cars might be assembled in South Africa for Africa, but you never know. It could be assembled in South Africa for Germany very soon. So watch this space. It's a really...
They actually export not just in Africa. Some of those cars made in South Africa are exported worldwide.
Oh, already. So,
yeah.
So to get it all the way from South Africa worldwide. So that is the value chain and the ambition that we are all looking at for the transformation of the continent. So what I wanted to do, Siby, you've heard, Honourable Minister, IFC is a partner of the Compact with Africa. You've worked with, you are also an investor on the continent. So where do you see momentum in terms of reform efforts, and which markets or sub-regions in the subcontinent is particularly promising for sustainable growth on the continent? I hope you're going to say Minister's example is one, but
definitely is. And I think, first of all, maybe for people in the audience that don't know what IFC is doing on the continent and the World Bank Group. I mean, we are part of the same group, both from the World Bank, who is focused on the public side, and IFC on the private sector side. Africa, the African continent, has been increased investment for the IFC for the last couple of years. To give you a couple of examples linked to the Compact with Africa, IFC has been invested 20 billion in those countries that you just mentioned, the 14 of them, and we deploy a sustainable number of resources, human resources, on the continent, because we strongly believe that to be closer to those companies, to be closer to understand the market, you have to deploy also investment officers. So we have today more than 900 people around the continent. So we focus on all the different countries with hub. We have people in Zambia, obviously, that are there and looking at all the different investments. But something to come back on the Compact with Africa and where we see opportunities. I think first I liked also what you said in the introduction, to find African solution by African. I was in the Africa CEO Forum recently. We had the opportunity to co-host a number of head of state from the continent. And what we could see is that how vibrant all the solutions are already there. As an investor, we are here to enable, to facilitate. And this initiative that has been launched a few years ago, I think, has today also great momentum under the leadership of South Africa to continue and grow around the different aspects of in the continent. I think in terms of geography, I won't say that there is one or another. I think we have to look also in terms of sectors. And when you mention the infrastructure sectors, the one that will drive also the continent growth, it's definitely part of it. So if we look at, and taking another, if I may build on the example of the Lobito corridor, and we are, as the World Bank Group, looking at and advising those different countries also on how this Lobito corridor will be a success. And this will integrate, obviously, the different countries in Central Africa, in Southern Africa. So there is different infrastructure initiative, and we are advising as IFC first upstream, what we call very at the technical level at the beginning, to say how do we facilitate and making sure that those also countries making it easier and business friendly. To take an example, in Rwanda, for example, where the IFC gave advice for a few years, and now on that's allowed to increase the ranking of Rwanda of making a business much ready, faster. The digitalization also program was there. So we, as IFC and the World Bank, are really focusing on the needs and on the demand. I think that's something which is very important to highlight in the Compact with Africa. It's a demand driven. So we are here to listen to the countries and on what is needed, and as IFC or the World Bank, we can help and provide technical assistance.
So, Siby, I'm going to probe you just a little bit. Which reforms work best? So look, countries don't have a lot of money. Countries don't have a lot of money today. So if you were to pick one policy area or one reform area that we should focus on to ensure that we realize the ambition that Honourable Minister has outlined, what would that be?
That's, I said, a 1 million question. So it's some reforms that are important. I will say that, of course, because I have a private sector angle, I think any reform that can attract or allow private investment of private companies to come and work on let's say, the more peaceful and transparent manner, that will be the best for the private sector and investment companies.
Reform for transparency. Okay. So, Peter, I'm going to come to you next. I know that the Africa Growth Fund of Funds has been a big investor in CWA countries. I'm going to throw that question to you. What are investors looking for to ensure that they scale up more in Africa?
Yes, very good question. And maybe I answer to the question what you asked before of what needs to be changed from a regulatory perspective. We are, I think, trying now for years to have a change in the European financial regulation, specifically in Solvency II for insurance companies and pension funds, but also for Basel when it comes to banks. And this means to have a lower capital charge for investments specifically focused in Africa or in or via blended finance structures. Right? I think currently this is not fairly regulated, and this needs to be changed for sure. As investors, we are looking. We are, let's say, obliged to deliver best services to our clients, and this what when they give us money, our job is to make more money. Very frankly, right? And I think this is one of the biggest challenges in what we have foreseen in the last years in Africa, and this is that despite the promise, which is for sure there, growing population, better education, growing middle class, great resources, all this. Let's say, fundamental driver for a macro investment story. Actual returns have lagged behind. I think we have to be so open and honest, especially in the private equity area. So the good thing is this can be tackled with blended finance funds, such as Africa Grow, which was an outcome of the CWA initiative under the Germany-led years. And we have today, we raised today 200 million in equity. It seems to be a low number, but I think for equity investments it's pretty decent. We have supported 16 local investment funds, so creating an ecosystem. I think in line with what you just said. And so far we have supported more than 90 companies. For these companies, 45,000 people are employed, and since our investments, this number grew by more than 20,000, creating good local jobs, tax payments, local income, and so I think as an investor, especially being an impact investor, this is what you want. You need to have a risk-return environment which is attractive for you. This is what we require in order to mobilize from our clients, but at the same time, of course, we're more than happy to support local impact.
Peter, can I challenge you a little bit on this?
Yes.
Okay. You say that the return investment is not high enough, but a lot of people also say that the return is high. So where are we? High risk, high return. And you are saying the return is low. Minister is saying, come and invest. Help us. Is the return, the low return driven by perceptions or reality?
I think it depends. And when I say it's lower, then I mean maybe more on an average basis, covering the entire continent. And this an average, it's the nature of an average. There are outliers to it.
Yes,
right?
Of course.
And I'm very hopefully that Zambia will be one of such outliers.
But you see, this is the story we need to tell. Okay, 54 countries, not one solution. So how do we reframe the narrative to? In Africa, these 10 countries will give you this return as opposed to low return on Africa. I'm pushing 54 countries, outliers, strong cases.
Yes. Well, I think by playing the narratives of the macro promises of Africa, I think this is what you can pitch and where you can certainly make a business case out of it. But I'm also saying very clearly this needs to be combined with additional state support for junior de-risking pieces and junior pieces in blended finance funds. And this is not something what in my view, the African nations need to do that. I think this is more something what the G20 or maybe even the G7 need to do. And that is a requirement, and the solutions are there.
Thank you, Peter. So at this point,
If I may just add
to
compliment on what you said on the return, and I think something which is important to know or to have in mind is that investors, when they compare emerging market, they compare all emerging markets, Africa, Asia, and then they look at Africa and say, compared to. So I think it's something also that we have to stop doing also, because the first is not this, probably some of the elements cannot be comparable and at the same level, and that's where also the low returns sometimes come. which is not necessarily true, as you said, and in most cases. So,
See, I struggle with that just simply because we're talking about a continent which has from 500,000 people to 250 million people. We're talking about continents with GDPs as low as negative to 7 to 8%. It's such a breadth of difference, and yet, dare I say it, it's treated as a country. And that perception of treating it as a country, I keep re-emphasizing it, and people keep saying it's not true, it's not true. Is that lumping together that is causing the perception and the narrative challenge? So I agree with you. We've got to find a better way of telling our story. Yeah. So on that point, I'm going to open it up to a couple of questions before I go back to our panelists. And I'd like to start with Philip Nell. So Philip is the Deputy Director General at BMZ. And as we all know, Germany drove the compact with Africa. Philip, you've listened to this conversation. I'd love to hear your views on how you think the compact with Africa is going in terms of the link between G20 countries and the signatories to the compact with Africa. And I'd really like to hear your views on Peter's suggestion around the European policy. Not to put you on the spot, of course.
Thanks a lot. But actually, Peter would have to repeat the question because I came in only late.
Oh.
And I'm happy really to address it, but just fine. Well, first of all, really thanks a lot to our finance ministry, the South Africa as well, and for sure the Zambian finance minister to be here and driving this conversation, World Bank and others. We remain committed. That was, I think, the message the finance minister sent out today, the German finance minister, Klingbeil, and as well the German development minister, Alabali Radovan. This is true for sure for the very dynamic South African presidency for G20. We are really heartfully supporting your agenda. This is true for the Compact with Africa, which is actually also addressing the diversity in a sense in Africa, because it addresses for now 14 countries, the latest that has joined Zambia. More countries are applying for membership, and it is really looking at also the framework conditions and what these countries can bring in. So in a sense, this is a club of faster moving countries where we can do business together for our joint interest. So in that sense, really, we are absolutely happy to continue support. From the German side, we just committed 19 million euros via World Bank and others on advisory services and also peer-to-peer learning, very important. We are working in many countries, including Zambia, including South Africa and others, on good financial governance, on illicit financial flows in a big Team Europe initiative, actually, also part of Global Gateway with hundreds of millions of euros investment in advisory service, but also in concrete investments. So there's lots of support going on and will be continued. We do work, and that's the big question, also with other G20 members really to join us more forcefully. That's very important. I think South Africa has is doing a great job here as well, and we have to push jointly others really to join more clearly as well. I think we need to reform as well the delivery model a little bit. We think that there needs to be even more country leadership, country platforms to bring together G20 and other support on the country level, very much really designed to the challenges you define, Mr. Finance Minister and others, so that support can really be effective. That's key as well. And for sure, there's the set of Compact with Africa 2.0 reforms and measures that are on the table. And this is a little bit the guidebook, which needs always to be adapted to each and every country. But I think the agenda is there, and now we really need to keep going. What I can say for Germany is that we are there and we remain committed. We hope for a very successful G20 summit and meetings before in South Africa this year, and hopefully as well find a very good slot for next Compact with Africa meetings. We are in conversation with all those engaged, and really thanks again to the Finance Ministry from the German side as well to take this forward. And happy really to answer the question as well, if you can repeat it.
Yes, so the question was, or the ask was, to mobilize more private investments from Europe. One item which would help is an adjustment of the Solvency II and the BaFin regulations, ensuring that the capital risk charge for, let's say, impact investments, maybe in general or maybe more specifically for blended finance funds, would be reduced.
No pressure.
Yes. So to be very honest, Finance Ministry there is a much better place to answer your question. But we know that these are challenges that we have to move there as well. But really adding as well from the perspective of the Development Ministry, we are working on guarantee schemes. We are working on Africa Grow, Africa Connect, partners in transformation frameworks, where we really try under also the big chapeau or the big heading of Global Gateway, a joint European approach. We're not talking about Germany only there. We are really talking about Germany in the context of Europe. And for sure, all those in Africa especially who think in the same direction to promote more private sector engagement, be it in infrastructure, be it in other areas. We also know that we have deficits on the German side when it comes to risk perception, be it real, be it maybe not so real sometimes. A big agenda, especially the new government now, you can read it in the coalition treaty as well, is committed to be more proactive there, bring together our Ministry of the Economy, our Ministry of Finance, BMZ and others for an even much more systematic way to leverage private funding and investment.
Thank you very much, Philip. I'd like to open it up to the room. But Minister, as we are asking questions, I have one question for you as people are putting their hands up to ask questions. Very often when we have these conversations, we hear a lot about the reforms that Africa needs to do. I'd love to hear your views about the reforms that Europe and the rest of the world needs to do to make sure that we progress. So just something to reflect on as I ask if colleagues have any questions. Over to you, sir.
Thank you. I'm Simon Injovu from Zambia. I'm coming from Small Scale Miners Association of Zambia. I would like to contribute a little bit on what has been discussed. I think
Simon, before you start your contribution, I have a slight affliction. If the intervention is too long, I start to have a coughing fit. I just want to tell you that in advance.
I'll be too short anyway.
Thank you.
Yeah, so contributing to the program on the center, I think investment must be done, especially in Zambia, because we have a lot of untapped resources on base metals and rare earths and critical minerals. And looking at where we're coming from, Zambia is one of the stable countries in terms of investment. We have a lot of copper, cobalt coming in from DRC, and it's only happening on the multinational exchange companies. But the community base, we have cooperatives, we have got associations, which needs a lot of funds, equipment, new technology to uplift the production of critical minerals. Europe wants to come in and collect minerals when it has been produced on a cathode base, the copper cathode. They don't want to come in and tap the base from the communities on what is happening. Unlike what is happening in China, China has sent a lot of investors with a lot of funds, and they're collecting and collecting and collecting critical minerals to invest in different technologies. So what we need to improve poverty, inequality, and vulnerability in Zambia, and especially Africa, is the investment to come on the ground, on the communities. To add on the Robido corridor, we've got minerals coming in. We need buying centers to be in Zambia, manufacturing centers to be in Zambia. Like that, we are able to see the production and increase human capital development on what we want to achieve, and also to revisit the sustainable development goals which we want to do.
Thank you,
So
Simon.
investment is needed. We've got more than 1,000 exploration licenses for base metal, rare earths, and precious minerals, which are not tapped now. So what is Europe, especially Germany? Where are you? You are the superpowers. We can't see you in Zambia.
Thank you. Point is noted. Okay. Any other questions very quickly? Okay. Thank you. Do you want to? Thank you, James. You have 40 seconds.
Mavis. South African focused on large-scale green industrial projects across the continent. Private sector investment's not going to flow until Africa stops being penalized on a cost of capital. So we need to re-rate the perceived risk. That risk is a gentleman's consensus out of OECD. So if I deploy a solar panel in Namibia or in the global north, although there's more sunshine that hits that panel in Namibia, it's more expensive because that panel costs more to buy, or the cost of capital is more expensive. So we need to address this elephant in the room around cost of capital. I know the South African presidency is looking at it for a G20 initiative, but it's a gentleman's consensus. So this is a reform that you talk about that Europe can address. And until that happens, blended finance is a small vehicle. It's not going to address the quantum that we need.
Thank you very much, James. Okay, so I'd like to come back to the panelists with your permission, because I don't see any more hands up. So I'd like to begin by asking Siby and then Peter to try and respond to Simon, I'm sorry, to try and respond to Simon's point around investment in local content development, because I think it's a very valid point. They've started chiming, so you have literally 50 seconds each.
Okay, let's try to summarize, but we can always take the conversation after the panel. But I think maybe just something that we are doing as well at IFC is to address that it's to invest also in local currency. So one of the reform actually that was taking place under the Compact with Africa was to enable certain countries, and not naming, I think it was Benin, if I'm not mistaken, to being able to raise money or to issue bonds into their local currency. So this is something that we are promoting into different countries, because being able to invest in your own local currency will get to the pocket also of the local community. And this is where also the need is not only to get foreign money on certain aspects, that in education, in healthcare, in fundamental needs, that you need to have those investments made in local currency. And in order to do that as an investment or as an international financial institution, you need to be able to allow those local currency to flow and to increase the ability to have those local currency markets.
Thank you, Siby. Peter, 40 seconds.
Okay, and if I may, I would like to answer to the blended finance is too small comment. I think this is not necessarily true. I think there is the possibility to significantly scale up blended finance. Our company alone, I think we raised 3 billion for debt products and 750 for equity products, right? So there is scale possible. Yesterday was the announcement of a new platform, Scaled, with I think AXA, Zurich Insurance, Allianz Insurance, CDBQ backing it together with European and Canada from a public perspective. So this alone is 2 trillion assets under management just by the private partners. Yeah. So when they come in, then there's more than enough money which can be channeled via blended finance. We just
Thank you. Minister, the last word to you.
Well, you asked the question, what reform should Europe do? I think the most important reform is to see Africa in an emerging different perspective. From a place where you focus on aid, to a place where you can actually go and do business because those of us living in Africa, we see the hesitation of European companies. The other parts of the world, if you look at the attitude of the Indians, attitude of the people from the Gulf, in other words, the Arabs, the attitude of the Chinese, they see more opportunities in Africa and they're moving strongly forward. The Europeans are hesitant.
Okay.
So there's a risk of actually the Europeans being left behind in Africa. This is something that I think Europe has to face.
Thank you very much, Minister. So, on that final note, I'd like you all to leave this room remembering one thing. Africa is ready for business. Africa is ready for investment. If Europe doesn't see Africa as an investment destination, Europe will be left behind. Africa will not. Thank you very much, Honourable Minister. Thank you, Peter. Thank you, Siby. Thank you, Mr. Oosthuizen. And thank all of you for joining us in this discussion. Enjoy the rest of your day. Thank you.